Welcome back to Bazaar Morning Call. Prakash Diwan is joining in now to help us assess, what one should look forward to in the markets. Prakash, hi, good morning, and thanks for being with us on the channel. Dabur is the stock I wanted to talk to you about because the management is very confident, right? At the analyst meet, they speak about double-digit revenue growth, maintaining 20% margins, looking at, doubling down on their healthcare business in a big way. Do you think that there is a big runway for this stock from here on?
Good morning, Sonia. So I think the reason the stock is where it is primarily because of this perception that rural demand is still absolutely very soft. Now, if you look at the commentary that's coming up from some of the auto names or some of the other FMCG names, including the likes of Colgate and Marico and all, it's very clear that you're actually at the trough of the operational strength that some of these companies have. But Dabur has actually streamlined so much of its supply chain in terms of the production units that they have. Some of them are out of India and all of that. And if this healthcare thing takes off, it's a very margin accretive activity which will change the whole dimensions. Even with volume growth not picking up significantly, at least you'll end up going home on the margin, the profitability front. So I think it's extremely positive. I don't see any reason why at 550, 560 zones, Dabur needs to be questioned on where it is headed in the long
run. Prakash, hi, good morning. Just a quick word on Bajaj Auto, which saw a pretty large move on Friday. I think the stock was up about 4-5%. There was an upgrade as well, I think, from one of the brokers. We highlighted that. Any thoughts? Briefly, go on.
Good morning, Prashant. So I think it's very evident that last year, when Bajaj Auto lost some market share due to the softness in some of the global markets, particularly Nigeria and some parts of Latin, people had started writing it off, saying this is going to be a very deep, long-term kind of a softness, and it will take some time for revival. But in the process, what they've done is they have utilized that softness or that lull in the exports market to focus more on their EV strategy, which they were late to come to the market for sure. So that's kind of picked up. And those premium bikes. So I think what's working for them is they have four very distinct revenue streams. And after a long time, I think Bajaj Auto is seeing all these four revenue streams, be it exports, be it the premium segments, be it the EV, and of course your staple three-wheeler and two-wheeler market. That all these four verticals are doing so well. I haven't seen this in the last many years. So what's working for them is all those small investments that they made. The investments are very soft, and it's a very smart management in terms of allocating capital. They've done so well. The ROCs and ROEs will be very clearly at least 30-40% higher than what they've done in the last 3 years. So that's the reason the re-rating is happening, and a lot of it is irreversible because once you reach market share, once you reach new product segments, it's difficult for the competition to dislodge you. I mean, so I think they made a comeback in most of the places where they were weak. My sense is this: last year September, Sonia and I were discussing post earnings. I remember the stock went to 3,700, but then it's a significant comeback, and this could probably continue for some more time.
When I started tracking Bajaj Auto, the stock was 200 rupees.
Oh, wow.
And now, this is of course way back in the day, 2008. Yes, and so now it's, look at it, 5,100. So that's just the power of compounding, right? I mean, these businesses, we talk about them sort of day in and day out, but when you actually map the longer term, you see the kind of wealth creation that's there.
Absolutely. So buy good quality companies, well-run companies with the niche in their space as well. And, over a longer term, you'll make some money. Well, Prakash, I wanted to ask you about this one, Vodafone Idea. It's been quite volatile. The street hopes that they can come up with some money. They've been making some periodical payments as well. The stock now is in double digits, 11 rupees 70 paise. And for this month itself, it's seen a move of closer to 30%. That's $3 effectively. But on a small base, it looks rather large. How would you approach the stock?
I think the entire space is getting reset very distinctly. So there is a clear acceptance by the market that Vodafone will continue to play a role as just as a third player, of course, but just as a respectable third player after the two large ones. And the 5G rollout focused by the other two names has actually given them some space to expand in even pockets where they were not very strong. So they have started focusing more on upgrading their infrastructure, repaying the likes of Indus. They've repaid close to 3,400 crores to Indus, I mean, which is significant, and to some of the smaller tower businesses which they use. My sense is that while Jio and Bharti end up kind of fighting it out on the 5G space and a lot of 5G derivatives, Vodafone will go into those pockets of 4G and some of the circles where it has a significant presence. For example, Mumbai, they still have a very strong presence. So that's where they are trying to kind of catch up and play. If things look up for them, they could at least organically start growing instead of degrowing, which means the stock would reset itself to a level of about 18, 20 bucks in the next year, year and a half. But then you don't need accidents in between. That's the whole idea. Something going wrong, somebody backing out, capex kind of getting impacted. So all of that, of course, are riders. But I think it has that merit to just because it's around, it's survived the toughest time. It survived the 104 rupees ARPU levels. Today you are looking at 200 plus. So possibly better times for the industry as a whole, and undoubtedly for Vodafone because it's continued to at least keep its presence intact.
There's also a listing today, right? Jupiter Hospitals, and we had a chat with the management. These are multi-speciality hospitals that they have, a very, very niche market. And this, of course, the entire space, the hospital space is done very well. Post-listing, if someone doesn't have any allocation in the IPO, post-listing, do you suggest one can buy this one?
Sonia, listings in this phase of the market, especially for smaller companies, which are more coveted than even the larger ones, given the nature of lesser free float and all of that, is a bit expensive. Most of these come at significantly well-priced valuations. So there's not much of room, and you have to wait for the organic growth of the company to justify any improvement. I would still go with tried and tested, more scaled-up models. Even though it's at an all-time high, my favorite continues to be Narayan Rodale because of the business model, the kind of diversity in terms of revenue and market segments that they cater to. So I'm not a big fan of IPOs, but of course we will definitely want to look at how it gets listed. So it'll be interesting. The space is getting more and more deeper and interesting. That's a very good thing for investors. But I'll stick to some boring stuff like NH.
Okay, all right.